So now we are moving on to the basic concepts of accounting. So I will go through each one of them briefly. The first one is business entity concept. So according to this concept, the business and the owner of the business, they are two different entities. So in other words, if I am starting a business, me and my business, they are separate. Okay. So let's take an example. For example, if Mr. A starts a new business, okay, and his company name is ABC, and he is introducing a capital of rupees 20 lakh in cash. So here it means the cash balance of this ABC company, that will increase by a sum of rupees 20 lakh. Okay. But at the same time, the liability of ABC company, that is in the form of capital, that will also increase. So it means ABC company is liable to pay rupees 20 lakh to Mr. A, that is to the owner of the business. So that comes the business entity concept. Next is money measurement concept. From the name itself, we can understand the meaning of it. That is, according to this concept, we can book or record only those transactions in our accounting books which can be measured in monetary terms. No more qualitative terms, only monetary terms we can record in the accounting books. Okay. Then I will also give an example for this. We need to calculate the value of stock of these items. One example I am giving just for explaining. That is shirts, rupees 5,000. Pants, they have given a value of rupees 7,500. But in the case of coats and jackets, the value is given is 500 pieces and 1000 pieces. So that is not in monetary terms. Okay, it is numbers. Then how we will calculate the value of stock here? Okay, so here if we want to record the value of stock in our accounting books, we need the value of coats and jackets in terms of money. Understood? So for that, if we conclude the values of coats and jackets as rupees 2,000 and rupees 15,000 respectively, then we can easily find out the value of stock. What it will be? So it will come 29,500. How? That is 5,000 shirts plus 7,500 pants plus we have concluded the value of coats and jackets, right? That is 2,000 and 15,000. That also we will add in our books. So it will come to 29,500. So we need to keep quantitative record separately. Only in monetary terms, the items that are measured in monetary terms only can be recorded in the accounting books. Hope the concept is clear for you. Then next is going concern concept. So our accounting, it is generally based on the assumption that a business unit is a going concern. So we are recording all the financial transactions of a business, keeping this point of view, that is in our mind that a business unit is a going concern and not a gone concern. Okay. So otherwise the banker will not provide loans, the supplier will not be supplying goods or services, the employees, they will not work properly, and the method of recording the transactions, that will also change altogether, right? So for example, a business unit, they will make investment in the form of fixed assets, okay? But here what we will record? We will be recording only the depreciation of the assets in our profit and loss account, and we are not finding out the difference of the acquisition cost of assets and the net realizable value of the assets. What is the reason? The reason is simple, because we are assuming that we will use these assets and we will be earning profit in the future while using them, right? So similarly, we will be treating the deferred revenue expenditure and prepaid expenditure. Okay, and this concept of going concern will not work in the following cases. One is if a unit is declared as sick, that is it is unused or it is an unusable unit. And when a company is going to liquidate and a liquidator is appointed for the same. Then when a business unit is passing through severe financial crisis and they are going to wind up. In these three cases, this concept of going concern will not work. So today we have completed business entity concept, money measurement concept and going concern concept. And the balance I will be continuing in the next class.